All right, we're live. Welcome back, investors, to Ticker Time News. I'm Adam, and the major indices did not move a whole lot today in either direction, which isn't necessarily a bad thing for sentiment after last week's rally. Similar rally efforts this year have been met with a tendency to sell into strength, and we did not see that today. There was a general lack of conviction on both sides of the trade, and that could be seen in the advanced decline line. Market breadth at both the New York Stock Exchange and the Nasdaq was roughly flat today. The major indices were pulled down mainly by mega cap stocks. The Vanguard Mega Cap Growth ETF, the ticker symbol I love to look at for this is MGK. And remember, you can follow along right at home. There's a link in the description of this video to TradingView. Click on it, sign up. Free account, doesn't cost a penny, and you can chart along right with us at home. Okay, the Vanguard Mega Cap Growth ETF, ticker symbol MGK. Let's look at that. It was down a whole, drumroll, percent today. That's right. Mega caps pulled the general market down today. I mean, today was a broad-based, right? Advanced decline, wash today. Mega caps were the big anchor that really held the market from going any further today. Okay, we see that there. Now, I do want to talk about the S&P 500 in just a moment and show you why I think today's stall isn't necessarily a bad thing and why it could actually lead to a rally later on this week. All right, let's just keep moving with this. The relative weakness here with the mega cap growth stocks is not completely surprising, as the mega caps completely outperformed last week with an 8% gain. This is the daily view of the Vanguard Mega Cap Growth ETF, and you can see here for 1, 2, 3, 4, 5 trading days in a row prior to today, all green, all gains. And there were 2 days where there were gap ups, right? So on our way back down, eventually it will head back down. We'll fill in those gaps at that point. But for now, here we are. It's holding right at that 21-day moving average, which is a bullish sign, but it is below its 50-day moving average. And remember, at that 50-day moving average, bullish above, bearish below. So keep that in mind. Now, the broader market held up better on the day, evidenced by the more modest 0.1% decline in the Invesco S&P 500 equal weight ETF. This ETF, ticker symbol MGK, is looking at mega caps, ticker symbol RSP. Put that in. This is looking at the whole market. Everything is equally weighted. Now, there's a couple things I want to point out to you on this chart. Equal weight for the market, right? Every stock has its own equal weight. Doesn't matter if you're a big Apple or if you're a smaller Enphase or a smaller even Lucid. Doesn't matter. Okay, let's look at this. Today, it ran right up and tagged the bottom of this first channel right here, this grayish box outlined in green. There's 2 of them. Why do I have them on this chart? Because on our way down a couple weeks ago, there were big gap downs. And remember, we always fill in the gap, right? Gaps always get filled. And looking at this, we've got 2 gaps right here that are going to get filled on the way back up. So what I'm looking at here is a potential for this week to rally to at least close out one of these gaps and fill it in, possibly even fill in the second gap before we start heading lower and find a new low for the year. Now, with these 2 gaps, the first one here for the RSP ticker is sitting about 138 at the bottom. And if I scroll in a little bit tighter here, you can see that when it opened today, it opened right at that line. And then, of course, for the rest of the day, it dropped because we were down for the day, minuscule, nearly flat. That's how far down. What's what I'm looking for? Live stream. Oh, I always get one mess up during live stream. That's why we were relatively flat today for the equal weight. But these two gaps will get filled back in. But again, it's below its 21-day. It's below its 50-day. That is very negative. But over the past 1, 2, 3, 4 days outside of today, they were green for the equal weight ETF. Now, there is a gap that was left down here. We'll fill that in when we come back down, but I don't know if we're coming back down yet. Now, the rest of this week, as we get to Thursday, Friday, here's what we need to look for. It is the month end rebalancing that occurs. The last day of the month is Thursday. Friday is July the 1st. So month end rebalancing. We have the end of the second quarter rebalancing. And we have end of the first half of 2022 also ending. So that's 3 different rebalances that are occurring at the same time. Now, just one alone can move the market in a positive direction. When you have all 3 stacked on top of each other, it wouldn't surprise me if we do end up getting a rally at some point during this week, especially towards the end of this week. Today's stall, it is pretty much normal in my eyes. I'm going to go back to the S&P 500, ticker symbol SPX. I want to show you this. On the SPX, let's look at here. Let's look at today's action, right? Today's action, Friday, we filled in this gap perfectly. We have one more gap to go. But today, there is a key level at 3,900. Where did we close today? At 3,900. That is very key. If we go to the 15-minute chart and take a look at this, 15-minute chart, let's make sure I got this chart lined up right. Good. All right, I'm going to put the last 2 days on the chart. So we have Friday, nice rally in the morning, nice rally into the close. Today, we had gapped up, but we had pulled back down. And we got to a high of 39.27. And then later this morning, we tried to retest this 39 to see if we could break above it, but we could not. We failed. 39.24 was the high. 39.25 was another high there trying to break through. Couldn't do it. Came back down. And then we sat right on top of 3,900 for the remainder of the day. So for 2/3 of the day, we sat at 3,900, no trading at all, just flat. And that's what shows with the Invesco equal weight S&P 500 equal weight ETF. It shows that exactly. So this is actually, in my eyes, a bullish sign that we did not close under 3,900. We were able to hold our ground. Bears weren't able to claw their way back in and push the market down. We held our ground. That's a positive sign to me. Sure, we were down a bit today. That's okay. We held that 3,900 line. I don't know how I can stress how important that is for a potential rally going into the middle to end of this week, right? All right, let's keep moving on here. I'll go back to the daily chart here. Now, most of the mega cap, get that daily chart. There we go. Okay. Here we go. All right. So most of the mega cap stocks, they closed in the red today. Amazon was one of them, ticker symbol AMZN. Let that load for you. Amazon exhibited the largest loss for mega caps, around 2.8% on the day. And it's up about 3.5% in the after hours. It is holding this line here really nice. Even though it fell back today, it's all right. It's giving profit taking, right? That's a simple term to use for what happened to today and why it was only a small move down for the majority of the stock market. Profit taking from last week's big run. Apple was another one. This is actually pretty amazing. AAPL for Apple stock. Apple was flat today. It was the best performing mega cap, but it was actually flat. And there was a report that was out this morning from Reuters that the Supreme Court decided not to hear Apple's patent challenge with Qualcomm. So that was good. But Apple was literally flat, unchanged from beginning to end of today, not a single penny difference. Now, Apple is up about 0.2% in the after hours, about 27 cents there. That's it. That's all it's moved. Qualcomm was up nearly 2%, 1.5% in that range today. So they did pretty good. Let me move on to another more mid-cap stock. Let's look at Enphase, because this is a stock that's been on fire. ENPH is that ticker symbol. Now, Enphase is one of my favorite solar energy stocks out there. I hold it. I want more of it. Obviously, the price is a bit extended. It's a bit expensive, but it has just been on a solid run here. Now, Enphase gained nearly 4% today after the company announced that its installers in Washington State, I want to make sure I didn't say Washington, D.C., in Washington State have seen growing deployments of Enphase energy systems powered by their IQ8 microinverters, following the product's launch in North America late last year. Now, the IQ8 microinverters paired or partnered with Enphase's industry-leading IQ batteries give homeowners more energy security as power outages and extreme weather and high summertime demand grow increasingly common. So Enphase, it's a real nice one here. Price is starting to get to an area where I think it's going to either contract or it's going to pull back down some. It's almost at the top right here in this pattern. And once it gets to this level, which last time it got to, let's call it, let's see, about 203, and we're at 206 right now. So it's almost to its high point. And then Enphase, you could expect a pullback in Enphase soon. All right. Maybe in this end of the week rally that we could potentially get, maybe Enphase goes up a little bit higher, but then it's maxed out for its local high. And you can see that on the chart here with this purple line going across the top. And then, of course, it would pull back down to the bottom, probably somewhere around 190 would be the bottom area before reversing again. But Enphase has been on hot, and it has been an excellent trade most of this year. Now, Shopify, that's another one I want to talk about just real quick because the price is just so surprising, right? Ticker symbol is SHOP, shop for Shopify. Shopify's 10-for-1 stock split is now complete, and the price per share at close today was $373.21. Isn't it amazing to see Shopify at $373? I mean, that is almost a sticker shock, right? Because they're so used to being thousands of dollars per share. So that's good. It was down 3% today. I expect that after the stock split. Moving this chart up so we can see here. We had big volume come in today, higher than average. And of course, that's what helped to sink Shopify down 3%. It's flat in the after hours, so it hasn't moved. It's also on the screen here. It's trying to build this base around $310 a share. I know that's a $63 swing from where it is right now. But it is looking to build a base right around 310 right now. I don't think that will be the low for Shopify. I think later this year, Shopify is going to go much lower and below that $310 a share. As a matter of fact, if we go back here and look real quick on Shopify, let me fix this chart. There we go. I'm going to go back in time here. I'm going to look at where Shopify is now compared to where Shopify was at its peak in 2019. You're going to see something fascinating here. In 2019, the peak was right a few more days, boom, right there. That, oh, there we go. Okay, let me hold it. $403 was the high in 2019. $403 a share. Of course, stock split adjusted was the 2019 high for Shopify. And now Shopify is under that $400. So now Shopify is below its 2019 high, which, if you've been listening to the channel for a while, we've been talking about for months now about this 2019 theory that a lot of the stocks that got pumped up during COVID will fall back down to their 2019 highs. I know it's a big fall for a lot of companies, but for some reason, that's what seems to be happening. So 2019 theory is real. Case in point, Shopify is one of them. It is below its 2019 high. Okay, now there's further evidence of the mega cap stocks pulling down the broader market today, and that's the outperformance seen in the small and mid cap stocks. The Russell 2000, let me put that up here on the chart. It was actually up today, while the other major indices were down. It was up 0.3%. That's really good. Also, the S&P 500 mid cap, I'm sorry, my apologies. The S&P 400, which is a mid cap selection of stocks, that closed with gains of 0.3%, just like the Russell 2000 did. So small, mid-sized caps, they were the biggest movers today. However, not all small and medium-sized stocks are created equal. Let's just look at Coinbase. Coinbase ticker symbol is COIN. Coin is the ticker. Now, Coinbase had a nice run at the end of last week off of some really nice news, but that was given back today, down 10.7%. Let's load this thing up here. I'm actually going to go to a weekly view for Coinbase, and you can see this week is already down further than the highs put in last week. Now, that's not something you want to see. You want to see the next week continuing to build on the previous week's high, so that way you know you're marching higher. Not in this case. Coinbase gave a lot of gains back last week due to a downgrade from or to sell from neutral at Goldman Sachs. Now, listen to this. I think this is worth noting. Back in May of this year, Bloomberg reported that Coinbase borrowed an undisclosed, we don't know how much they borrowed, amount of cash that was secured by Bitcoin. It was a historic transaction from who? Goldman Sachs. It was the bank's first Bitcoin-backed loan. Now, Goldman Sachs is coming out and saying, sell Coinbase. That doesn't seem to be in the best interest of Goldman Sachs. They want their money back, right? So something interesting there to pay attention to. Also, Etsy, ticker symbol is the company's name, ETSY. Etsy was down 3.5% today from its own downgrade to hold from buy. Now, Etsy, I can totally see their downgrade. The e-commerce focus on discretionary products, well, that's going to slow down, right? Their sales will slow down because of that. As surging inflation and uncertain economic conditions that we're living in, it's going to be hard because consumers are going to have to cut back their spending. Sorry, retailers, but Etsy's one that is going to struggle. And keeping it on the weekly view here for Etsy, if we go back to 2019, its high in 2019 was March the 4th of 2019 at 73.35. So it is getting awfully close to that 73.35 2019 high, right? So I think Etsy is definitely going back below its 2019 high. As a matter of fact, I'm going to put a mark right here on the chart, give them a little extra here. I'm going to put it in at 72.85. This bottom line here, and I'm going to change it to red. I do believe Etsy will go below it. So if you're looking to buy Etsy, you think it's a good long-term buy, then check it out under $72 a share. That'll put Etsy underneath its 2019 high. And I just can't believe it. I mean, look at this almost V-shape, not even a V shape, because it was a quick gain there over 2020, 2021, but then bam, this thing just fell like a rock, right? All right, so let's move on now. Out of the 11 S&P 500 sectors, only 3 closed in the green. Energy was one of them. And I'm going to go to the S&P 500 sectors. Remember, if you want a copy of this, just leave me a comment. I'll share a link to this so you can have it as well. Energy was the biggest one up today, and quite frankly, it's due for it. If we look at energy, I'm gonna go back to the daily time frame on the chart. Energy tagged our low box here, and then it just kind of bounced from there. I could totally see energy moving higher right now because it has just been way oversold for how quick this thing's been moving all year round, right? All of 2020, energy has just been up and to the right on the chart. This was a big correction, not just a pullback, but a correction that has actually sent energy into a, bear market. So glad to see energy pulling back, and I think it will continue here. It was on low volume. And we see that a lot on rallies, like the last rally before its big pullback, right? This was on below average volume right here. And what do we get today? Below average volume. So it's not something completely out of the framework there. That's where it's at. Now, just because energy was the leader and by a big margin today, there were a couple others, and they were defense oriented. Utilities up 0.8%, healthcare up 0.4%. The top slackers in the S&P 500 sector category, right? Consumer discretionary down 1.1%. So let's pull up consumer discretionary here, which is the top one on the list, and adjust the chart just to make sure. I'm going to hide volume here for just a moment. Volume today was pretty light for everybody. If we look here, maybe we're forming, I don't know, maybe, I don't know if we're really forming anything at this point. If we look at consumer discretionary, this is one that's going to continue to get beaten up. So there was this trend line up here of resistance, this purple line, but it hasn't gotten back to being close to that trend line since April 21 of this year. And I just don't see it getting back that high up to that trend line. This thing has fallen hard, and I think it's just going to continue to fall. We have not seen lows yet for consumer discretionary. And then we have communication services. They were also down 1.1% today. I believe that is this group right here, and it is. And again, marching straight down. It's getting close to tagging its 50-day moving average, and all of 2020, it'll tag that 50-day moving average, and that'll be the sign that it is going to fall. So watch for communication services to now start to decline. Maybe another few point leg up, it'll tag that 50-day, which that is sitting at 199 right now, and we're at 194. So it's not that far off, and then it'll come right on down. Information technology was down 0.6% today. Now, Treasury note yields, they settled the session near their highs of the day after some relatively soft auction results for the 2 and the 5-year. Now, the 2-year note, it rose 6 basis points, and we can look at that going to US 0 to Y. That'll take you there, and we can see the 2-year, it's holding above that support line that we had there, and it has now filled in that gap, right? I can now remove that gap because it's been filled. All right, so it's on the march again. And again, 2022 has been a good year, at least for rising yields. They've been up. Pay attention to this number. It closed at 3.12. It's at 3.13 right now. So it's up just a little bit in the after hours. Then the 10-year, we'll go to that by going to US 10Y. The 10-year rose 7 basis points to 3.19%, and it's up a little bit in the after hours, just barely, to 3.20%. The 2s and the 10s are flirting with that inversion again. Are we going to get a second inversion in 2022? Well, that's totally possible. Okay, let's look at this real quick here. I had these green lines dotted out here for what I thought the 10-year would end up doing. So far, it's following along with that, going a little bit closer. We're right to the area where I thought it would maybe start consolidating. It filled in this gap that we had. I can take this circle away. Nike did, and I totally expected that. And I'll look up FTNT also. I'll put both. I'll look at Nike too, and that. As a matter of fact, let me get Nike results loading here, because we'll look at Nike. All right, that's loading. All right, I'm almost done with the quick take. So, inversion, I think there could be a possibility, a big chance of another inversion occurring. Now, there were actually some positive economic data today, and I want to go over those points just real quick. Total durable good orders increased 0.7% month over month. Analysts, they were only looking for 0.1% gain, which followed an unrevised 0.4% increase in April, the previous month. Now, if you take out transportation, durable goods orders also increased by 0.7%. Expectations were a little bit more at 0.4%, and that followed a downwardly revised 0.2% increase in April. Now, what do all these numbers actually mean? All right, getting Nike going. Okay. These numbers, the key takeaway from these numbers is that business spending held up quite well in May, evidenced by the 0.5% increase in non-defense capital goods orders, excluding aircraft. So that was a piece of good data for the market and all this negative data we've been getting. Then our real surprise of the day came in housing market data. Pending home sales for May jumped 0.7%. Expectations were a loss of 3.5%. That's a big difference, especially since the prior month was revised to a decline of 4% from a decline of 3.9%. So an extra 0.1% added to the previous month. That's a big one. Now, the rest of the housing market, again, we may have seen this in the mortgage application rates, right? rising the past 2 weeks because of a little dip in interest rates. But interest rates are going back up now. Are we going to see any more dips? I don't think so, but I could be proven wrong. We'll get the applications index later this week too. All right, looking ahead to tomorrow, Tuesday, market participants will receive the following economic data. May advanced retail inventories. Prior month was 0.7%. And we'll also get May advanced wholesale inventories. Prior month for wholesale was 2.1%. Both of those reports get released at 8:30 a.m. Eastern. I expect inventories to be heavy. They have been, and I don't think consumers are buying enough for those inventories to really come down. Then we get April's FHFA Housing Price Index. The prior month, it was 1.5%. And then we also get another piece of data for the housing market. This is a big one. The S&P Case-Shiller Home Price Index. Now, analysts are looking for 21.1%. The prior month was 21.2%. Where's this going to fall? Higher or lower? These come out at 9 a.m. Eastern. And then the last data point is the big one for the market tomorrow. Big one. The June Consumer Confidence reading. Now, analysts are looking for 101. The prior month was 106.4. It's released at 10 a.m. The reason this one will be watched so closely is because after the June consumer sentiment, a little bit different, the June consumer sentiment index, it was the lowest on record, going back decades. So how's the consumer feeling? I would imagine not too good. All right, let's look at Nike. Let's look at, I watched the video about the GPUs. I did. I sent a message back. I hope I tagged it right. But that's a good point on NVIDIA. Just real quick on that one, and then we'll get Nike and FTNT going as well. There's this, I wouldn't call it a theory. I would say it's fact, right? There was a video that that I watched from our investor community on Patreon, and you can join that by clicking the first link in the description. Ticker symbol NVDA for NVIDIA. And in this video, they're pointing out the fact that companies like NVIDIA, right, GPUs, the market is being flooded with GPUs right now, not from gamers, from crypto miners. Since cryptocurrency, Bitcoin, Ethereum, is being harder or becoming harder to mine, well, now people are like, well, I don't want to do this crypto mining thing anymore. It's not as profitable as I thought. I mean, a year ago, I don't know, I'm not exactly for sure, maybe November, maybe a year ago, better yet, when Bitcoin reached its high of 69,000 per coin. If you were a Bitcoin miner back then, you could mine a coin and trade that in for $69,000 if you did it at the high. Now, if you are mining Bitcoin, what are you going to get? $20,000 per coin? Is that going to cover your cost of electricity for running those machines? Because those machines, they get hot. They burn out. They need to be replaced. So Is it worth it for a small-time crypto miner? Probably not, quite honestly, with the costs involved. So this video was pointing out that the GPU market is being flooded from crypto miners who are saying, you know what, this isn't for me, who maybe FOMO'd into crypto mining thinking, oh, this is awesome. I can just, let it run in the background and earn some money. It wasn't that easy. So this could affect players like NVIDIA because of this. I'll go back to NVIDIA. That was Bitcoin's chart, by the way. I forgot to mention that. Going back to NVIDIA, this could totally hurt NVIDIA. And like I commented back to you on Patreon, that's why I am holding right now and not buying NVIDIA until it gets into this buy zone right here. Sub 150 or great or better. If NVIDIA gets below $150 a share or more, at 150, that's when I'll start watching it closely. I have a stock alert set up for it. When it crosses that 150 line, I'll know, and then I'll start paying attention to it more on a daily basis and start following it to see how much lower will it go below 150. And with this guy's evidence about the GPU market being flooded, well, that could hurt NVIDIA's earnings and cause them to go into my buy zone here. And nevertheless, it doesn't really matter, quite frankly, about the GPU market. I just think overall, NVIDIA will be pulled down and pulled down to a new low, maybe October timeframe, just because of what's going to happen with the overall market and the overall economy. But the GPU thing, it will take some right off the top line for NVIDIA's earnings. Okay, I found that interesting. Hopefully I explained that okay. Let's see here. Let me go to FTN and then we'll pull up Nike. FTNT, got it. Okay. Oh, this has been a bumpy ride. Bumpy ride. All right, they're just lagging there for just a second. I want to see what they are doing. Profit margin has been holding pretty well, 18.8 and then 18.1 on an annual basis. Quarterly, profit margin was increasing. It went from past 4 quarters, 15, 17.1, 18.8, 20.6, but then it dropped real hard to 14.5 in Q1 22. Year to date, down 18.2%. So it's been holding up fairly well. 11.8% it is up in the past week. I can totally see that. Totally see that. Let's see how volume has been playing. All right, its volume's been just as shaky as the stock itself. Okay, we got earnings. It's still a month away. Where do we get a special stock split of 5-1? So we are split adjusted now and have been, it looks like, for a couple of sessions. We are in a downtrend here. It looks mostly like it's moving sideways, but let me get my highlighter here. You can see we have high there, and then we have lower high, and then we have lower high. while we're also from this point, we've got lower low and then lower low. And then I would imagine we might have a bit of a rally here. It would be interesting what this rally that's happening right now would need to do is it would need to break above 62.41. If it were to break above and hold and close above, what was that? 62.41. 62.41. This rally right now needs to break 62.41 in order for a new high to have been made. And at that point, then you could say, well, maybe we got something here. But then again, it could get to that point, it could close there, and then it could just fall from that point. But you want to see higher highs and lower highs as a reversal from this lower high and lower low trend that it's in. Now, I would imagine this 200-day moving average is right there at that high. It's coming across like this. And the 200-day moving average is at 62.39, which is real close to that high I told you of, what was it, 62.41. So it's real close there. So that 200-day moving average will probably act as resistance and then send this right back down, potentially, testing out this low that was made right here. And that low would be, let's line it up, 48.73. So two things to watch for. Can it close above and hold from the previous high, which is 62.41? And if it can it successfully rally from there, maybe even back test it as support and then continue on? That's what you would want to see for a bullish move. But most likely, it's probably going to hit that high and then come down and then retest the lows that are right there. And if it makes a new low, which I imagine it probably would, and quite frankly, that could end up being right here with this vertical line at earnings time. And if we go back and look at 2019 here, I mean, it's pretty extended. It may not fit into the 2019 theory because that is really, really far off. It's kind of like Apple. Apple, I don't think would fit into the 2019 theory. $24, $25. Yeah, I just don't see that happening. I think that if it did break to the downside and this thing was looking for lows, we've got this area right here that could be supportive around 42, 43. That's possibly where the new low could take us. But I do think there would be a new low this year, just because the overall market, that's where it seems to be headed. So just a quick take there. Obviously, the past several days have looked really good. We get a flat today. Let me look at short term, and I'm going to go to the 15-minute chart here. And if we look over the past 3 days, it has been moving higher the past 3 days. On Friday, there was nothing but buying. Look at that, into the close. So this rectangle right here is last Friday's moves, and real strong into the close. But then today it got to this high right here, and there were a lot of sellers stepping in at that point. You can see it in the volume profile here on the left side. Buyers didn't step back in until this line right here at about 58.91 ish, maybe up to 59. So it could have reached its top. That's a possibility today, but it hasn't retested that high. So just a few thoughts there for you. Nike, wow. Let's see here, Nike. Let's go back to the daily view here, and NKE is the ticker for Nike. Down 2% on the day, 2.7% in the after hours. Yeah, it was good to play puts on Nike. Definitely. All the shutdown in China, that's not good for Nike. All right. So Nike had some big selling volume today, above average, almost double average. Let's zero in here. So Nike here. Let's see if TradingView's got it accurate. Reported 90 cents a share. Yep, 90 cents EPS. 10% beat. Let's see, reported revenue, 12.2 billion. Yep, and that beat by 1.4%. But the problem here is guidance, which is to be expected. And we've been talking about this for weeks, that the majority of the companies out there, they have not revised down their guidance. So there's a ton of that to come. I think this incoming earnings season, and I shared a note with our investing community on Patreon about this incoming earnings season. It's about a month away-ish. We're going to see a lot of revisions, and revisions to the downside. Let's see, what did Nike have to say? Let's see, as far as the anticipated supply chain problems, inventories grew 23% to 8.4 billion. The company said elevated in-transit inventories due to extended lead times from ongoing supply chain disruptions, partially offset by strong consumer demand. See, that strong consumer demand, that's going to start fading a little bit. And the supply chain, it doesn't sound like it's gotten better. Extended lead times, that means it takes longer to get it. Ongoing supply disruptions, that means there's problems in every part of the supply chain. And I remember companies saying that by the first half of 22, back at the end of 21, that the beginning of 2022 is when the supply chain problems would ease. Obviously, that didn't happen, and it's not going to happen. I think some of the supply chain problem we have is fundamental, and it's going to stay that way for quite some time. I think our entire supply chain unit, right? Every link in the chain, I think they're going to have to be revamped, redone. The supply chain is going to change. Let's see here. Nike also blames inflation and foreign exchange impacts that are negative. Gross margin fell 80 basis points to 45%. Higher freight cost, higher logistics cost. Let's see. They also say a strong dollar was cited for a 4% gap between currency neutral sales. See, foreign exchange rates, these multinational companies that have to deal with sell their products in different countries, the exchange rate, it can affect them. And it can have a negative impact. It can have a positive impact. And at this point in time, it's having a negative impact. Let's see here. Oh, this is a positive for Nike. The board did approve a new 4-year share repurchase program. I love those, by the way. That will allow management to buy back $18 billion in common stock. The new program replaces a prior $15 billion share repurchase program that was due for termination in fiscal year 23. All right, so they can spend $18 billion over the next 4 years to buy back their shares. That's a plus. That's good for investors. That means that Nike themselves can help the asset price, their stock price, the value of their stock to increase over those 4 years. So yeah, that's a good thing. Let's see here. Oh, something that I forgot to mention that I wanted to. Last week, we talked about on the live stream about the Fed releasing the results of the bank stress test. Well, since then, today, a bunch of banks came out and increased their dividend. And many of them cited that the stress test showed that they had more than enough capital to sustain a, quote, severe recession, end quote. So they increased their dividend to disperse some of that money. So that was a positive thing, development today for anyone holding bank stocks. JP Morgan is pretty good. Wells Fargo could be an okay one if they can really turn themselves around. Bank of America is all right. I also like regional banks. You may not get the best dividend from regional banks, but yeah. All right, so Nike, I'm pulling up. I want to see what they projected. All right, so we already mentioned that gross margin decreased 80 basis points. Inventory for Nike, 8.4 billion. Inventory was up 23% compared to last year. the same time last year. That's a lot of inventory. A lot. Because what happens, I've said it 100 times, when you have inventory that is just sitting there, whether it's on a container ship or in a warehouse, it doesn't matter. It can get damaged. Well, then you can't sell it for retail. It gets stolen. Well, you definitely can't sell it for retail then. So it's never good for companies to have excess inventory because it goes right to the bottom line. Unfortunately, though, our new supply chain, we're probably going to have to deal with and learn how to manage more inventory, because just on time inventory was shown to be a complete disaster during COVID. Let's see here. Dividends of $481 million, up 11% from the prior year. We talked about the share repurchase program. So Nike's not going to be the only company to have to revise down with their guidance. Upstart was one that was hit today. I'm going to pull up Nike's actual earnings report. But Upstart got hit today with concerns of delinquencies rising. That's another thing for banks as well. But they raised their dividend because they don't think it's going to be that big of a problem. All right, I'll bring it over here to this screen and we can look at Nike here. Together. So fourth quarter revenues, 12.2 billion, down 1% over last year, up 3% on a currency neutral basis. Nike Direct up 7%. Wholesale revenue down 7%. Gross margin, we talked about that. Yeah, Lululemon, I think, moves in tandem with Nike. They both companies seem to be gearing towards the same type of consumer. All right, let's see. All right, hold on. Almost. I think your question there about Intel opening foundries in the U.S. It is one reason I started to buy their shares. I think it is excellent. See, Intel is going through a transition period right now, and that's going to hurt its stock price in the short term, maybe even in the midterm, right? But over the long term, once they open up more capacity, that's nothing but excellent for Intel. Intel is going in a completely opposite direction from some other chip makers, in that Intel doesn't just want to design them and have someone else build them. Intel wants to design them and build others. A lot of people don't have the capacity, and Intel is building that capacity, and I think that's really, really good for Intel in the future. It is a very long-term play. Yes, it is. Absolutely. All right. What are these in? Millions of dollars. So they got $8.5 billion of cash. Okay. And let's just go up here and see. Cost of sales, 6.6 billion a year ago, 6.7 billion today. Gross profit, 5.6 a year ago and 5.5 today. So that's where you see gross margin go down. I wonder if I can get editing tools. Oh, that's not what I want. Let's go to a highlighter. This doesn't really work as well as I thought. All right, right here, this gross profit. This is why it dropped right here, that line. A year ago, 45.8% gross margin to now 45.0%. So it cost Nike more, $6.73 billion to make $12.234 billion. And a year ago, it only cost them $6.689 billion right here to make $12.344 billion. So that's the gross margin slipping away, excuse me. And if we look a little bit more here, where's any big differences from a year ago? Well, selling and administrative was a bit of a difference here. We went from 30.3% up to 33%. Or if you want to use dollar amounts, it was 3.7 billion a year ago and 4 billion this last quarter. So that's where some of that cost came from. Again, that was selling and administrative. Other income is actually an improvement. Not that far off. Income before income taxes. Don't care about that right this second. But the effective tax rate last year, it was 18.6%. This year, it's negative 4.7%. Okay. So going back to this, they've got 8.5 billion in cash, and it cost them 6.7 billion to bring in their revenue. Any other big numbers that change? Here's one. Inventories. Yeah, that's kicking them right there. Inventory line right here, up 23%. Look at that. A year ago, it was 6.8 million. And then here it is, 8.4 million. So inventory is kicking their butt. Also, prepaid expenses and other current assets, 42% change. It was 1.4 billion a year ago. Now it's 2.1 billion. That's significant. They did a better job of their leases that they have. Another one is deferred income taxes and other assets. That was 31%. It was 2.9 billion a year ago, 3.8 billion this past quarter. So, I mean, you can go down here and you can find what's costing them. Inventory is a big one that's costing them. And let's see, I will wonder. Oh, I guess that's it. Okay. Well, inventory is a big killer for Nike's profits right now. And that's not going to get better anytime soon. That's just going to continue on. All right. Any other questions you guys want to talk about? I've covered everything that I had on my mind for today. Tomorrow, close out that. Oh, there is one other thing. There's one other thing. I had my Twitter account open for this. If you're not following me on Twitter, please consider doing so at Ticker Time News. Pump stuff out all day long. Here's one, a tweet I posted from Bloomberg 4 hours ago. The tweet, Robinhood Markets, and their ticker symbol, Hood, HOOD. Wait a second. Is this back at the top? Okay. Follow up to report that FTX crypto exchange is considering acquisition of the company. Now, a few months ago, during a live stream, I said that, Robinhood sitting down here at $10 a share looks like a real good bolt-on acquisition type company for maybe a crypto exchange who wants to start offering a brokerage service. Well, there you go. Or even a larger brokerage company that wanted the simplicity of Robinhood's mobile app. Maybe that would be a bolt-on buy for them. And, offering $15 a share, that would have been reasonable. And then we get this rumor here that FTX is considering acquiring Robinhood. Robinhood stock today, let's just go over to Robinhood stock, HOOD again. Robinhood shot up today, and so did Revlon. I mean, it's just been a crazy thing. All right, so look at Robinhood today, up 14%. but they're down 5.5% in the after hours. Why did they drop so far in the after hours? Well, I have another tweet to show you. So, boom, shot right up. And if we go here to the 15-minute chart, you can see this all played out late in the day. So here was the big move right here at, what is this, 245? Boom, shot right up. But in the after hours, down 5.5%. Well, if I go back up in my timeline here, you're going to see this tweet from 2 hours ago. Robinhood Markets slides on a report that FTX CEO said the company is not having any M&A, which is merger and acquisition, conversations with Robinhood, according to MarketWatch. So, earlier this afternoon, Bloomberg says FTX is considering buying Robinhood. And then, in the after hours, you have MarketWatch saying, oh, no. FTX is not buying Robinhood. So what's going on? Is it or is it not? Is FTX buying Robinhood? Well, it's all speculation until we have clear-cut evidence, right? Until somebody says something, or until we get a filing with the SEC. So Robinhood, it's now it's even being up, 9%, take out after hours. It's still below $10 a share. It's $8.61 a share. A $14, $13, $12 share offer, somewhere in there. That would probably be good. Isn't Bloomberg infamous for posts like this? Yeah. Absolutely. You got to be careful with Bloomberg. And oh, man. But it was a fascinating story. I do think Robinhood would be a good acquisition for another company. Get Robinhood CEO, out of the picture. And maybe Robinhood can be saved in a way. Robinhood definitely made it super easy to buy stocks. I'll give them credit for that. They absolutely did. But the rest of the stuff, I don't know. I'm on the fence about it, I guess. I say they definitely did not treat their customers right, but they did make an innovation that is beneficial to retail investors. And I guess that's where I stand with it. I like the innovation they did, but I don't exactly like some of the moves that they made once they started to grow. All right. Well, that is, again, everything I wanted to cover in today's episode. So let me know if you have a question. I'll give you a minute or two here, and then we'll wrap it up. While you are doing so, let me just say, do me a favor, click that like button while we're thinking about it here, and share this video, subscribe to this channel. All three things take you just a second to do, and they're a real big help for the channel, so I greatly appreciate that. And then if you want more of this perspective and a ton more content, then come join our investor community on Patreon. I'd love to see you there. Ton of information. I mean, just a lot. Sometimes I think I'm sharing too much information. And if you are one of our Patreon members and I am sharing too much, just let me know and I'll slow it down a bit. I can also kind of maybe tweak it a little bit for what I'm sharing. So just always give me your thoughts. I'm very nimble and want to keep that working in the best possible way. All right, well, we'll wrap it up here. Thank you again for joining me today. I greatly appreciate it. And that's it. I'll find the end broadcast button here. And I'm so excited for this earnings season. It should be an interesting one. Yeah, I don't think it's going to be a fun one. But then again, it depends on your term of fun, right? Putting in puts, it can make you money. Shorting activity can make you money. Just have to be careful. So yeah, we'll leave it here. Thank you again, ladies and gentlemen. I greatly appreciate your time, and I'll see you in the next video. Take care.